Hello, traders. It is Tuesday, April 21st, and we're 3 hours into the trading session. Pretty weak action today. So we had this gap down early in the day. We had a 10P cross early in the day. Looked like we might get a little bit of a bullish run here. We were actually above the high of the day right in here on some long green candles. I tried some longs in here, and as the market tried to reach higher, this long red candle was a warning sign. It took out that green candle. And then this long green candle here, which should have resulted in us at least testing that high, failed instantly. The fact that this little bounce into the gap was so shallow and so brief told me on this fail right here that we were going down. Now I did short the S&P 500 in here, made some nice money, took some short positions in some stocks and made some money. But I'm not going to tell you that I had a great day because the longs that I got into here, CRWD and BYND, they stung. I took some losses on those. So I was able to recover, make some money down in here. This is going to be a bearish trend day. We're not going to see any meaningful bounces until the last 30 minutes of trading. You can see the steady selling pressure. Again, another fairly brief bounce that lasted maybe 40 minutes. And here we go, testing the low again. You can see the 10P indicator here crosses, tells us that we might have a little bit of a bounce coming. Now we're starting to roll over, probably likely to see some more selling pressure. We're in the middle of the day right now, so I'm not looking for any big dramatic moves, but we'll go out to that daily chart and see what's going on. In my morning comments before the open, I had pointed out that we've got Doji, 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 Doji. All of these tiny little bodies that we have for candles are indicating that there's not a lot of momentum. So as the market rallied up, then we started to see equilibrium. And the momentum from this rally started to stall out. We really hadn't gone anywhere in the last 8 trading days. If you watched my video yesterday, I pointed that out as well. So I think we're going to see some selling pressure. If you take a look at the oil industry, that is a big problem, and it's one example of what we're going to see across many different industries. Coca-Cola posted earnings. They said that volumes in April so far are down 25%. So they're really hurting. In fact, that's the short that I'm going to show you today. That's going to be my swing trade. But let's take a look at how yesterday's swing trade did. I'm going to try and recap the stock that I showed you the day before. I'd mentioned to you yesterday you could buy CRWD, and that was my long of the day. I also gave you a bullish put spread that you could sell on that. You could see that the stock pulled back a little bit into the close, but it held its gains pretty well for most of the day. This morning, if you would have bought it yesterday, you had a chance to get out and take some profits on this big market gap lower. That would have been a very prudent thing to do. You see the market gapping down like this, you've got an overnight long, get out, especially if you've got profits. Take them right away, let the dust settle, see what happens. Now, I also mentioned selling an out of the money bullish put spread on CRWD using that 200-day moving average, or excuse me, yes, the 200-day moving average, which we went down and touched. So you probably filled on that, and that I believe was a May 1st order. So I'd be a little bit careful with that. You got to watch the market. In fact, if you've put that trade on and you've got a chance to take a small loss, I probably would here because I don't like what the market is doing. I think we're going to see some additional selling. And the trade that I'm going to show you today is going to be a bearish call spread. So if we go in, put up KO, take a look at that, and you'll see all I had to do to find this candidate was go into my bearish searches, click after earnings. There it is. I've got 2 candidates right there, right out of the gate this morning. Coca-Cola, I like it on the short side. You can see the B, that stands for before earnings. There's a little horizontal support level right in here that's been breached today. And you can see that overhead resistance is way above. Now here's a nice resistance level that we are going to lean on for this trade. You can see that the stock will at some point have a tendency to want to go in and fill this gap. But until then, that is a firm resistance level. Hover over that opening from the long red bar and you'll see 49.51 is that resistance level that we want to lean on. So we're going to put up the option chain and we'll go into Coca-Cola. We're going to go out to the May 8th expiration because earnings have been posted. We've got time. We want to distance ourselves from the action. Coca-Cola doesn't make big moves. So what we're going to be looking to do is to go in and we're going to sell that $50 call and we're going to buy the $51 call. And you can see that the spread on that is currently 3 cents bid offered at 20 cents. Well, on a spread like this, it's $1 between the strike prices. I'd like to be able to bring in a 20-cent credit. So that's what I posted in the chat room. Unfortunately, the stock is starting to really drift lower. Look at that steady, steady selling pressure. So from a day trading standpoint, I like it on the short side. If the market puts together a little bit of a bounce in here anyway, and at any time, maybe up to that 45.80 level, this is where it looked like it was maybe possible for us to get the trade done. Probably need to get up to that 46.20 level. Then I think those premiums will be there. But we need to see a little bit of a market rally. We've got Netflix after the close today. We have some mega cap tech stocks on deck. Most of the mega cap tech stocks are weak. I showed you that Apple bearish call spread last week. That's beautiful. Take a quick look at that. That was a trade I showed you on Friday, and that stock is very, very weak today. So Apple has actually fallen back into a gap on a daily chart, and we can see right here there was the gap up, and that gap failed, and that's exactly what we were looking at last week. We wanted to sell those options right here at the 285 strike. So we sold the 285, 287.50 bearish call spread that expires this Friday. We sold that for $1. If that works out for us, we're going to make approximately a 66% return on the margin that we put up on that trade. And right now, with the stock down to $266, 20 points out of the money, 3.5 days left to go, I think we're looking pretty good. So if you're new to these videos, you're watching this on YouTube, make sure that you subscribe to this YouTube channel and turn on your notifications so that you don't miss any of these videos, because I promise you I'm going to have trades in each and every one of them. So we've kind of knocked through what my pick of the day is. Coca-Cola looks great on the short side. I'm happy that the earnings are behind us, so we don't have to worry about that. They've announced that volumes are down 25% in April, so there's a lot of news weighing on the stock. I think we're going to see some real problems in the economy. We haven't even gotten out of the gate yet. We've spent $6 trillion. The war chest is pretty empty. Some states are looking to reopen in the middle of May. Every single week that this lockdown exists, the economic recovery becomes exponentially more difficult. And the oil industry is a warning sign. You're going to see that happening with home building and mortgages, consumer lending, car sales, travel industry. It's going to be, it's going to be very, very widespread. Retail, I can go on and on. So I view this as skies were bright and sunny in February. Everything's great, full employment, great GDP growth, and then the storm rolls in and the tornado wipes everything out. The sun is back out right now, meaning that the coronavirus is starting to decelerate in terms of its spread. So that's the good news. But now we look around and destruction is everywhere. Now it's time to rebuild the economy, and we've got to get back on track very, very quickly. This is not just a U.S. problem. This is happening globally. It's going to be a very slow recovery, so we should expect more selling. I'm telling you right now, you should be out of your long positions and you should be preparing for a market pullback. It may be a little bit choppy in the first few days here because shorts tend to be relatively passive ahead of mega cap tech earnings. But as soon as you see these stocks go through, you're going to see a lot of selling pressure. So once Apple and Google and Facebook, once everybody uh, reports, the air gets let out of the balloon. The back half of earnings season is going to be loaded with all sorts of retailers, and that's when the problems start. So Be ready for a pullback here, folks. I'm telling you, it's not going to be very pretty. Do we get down to the lows that we had earlier in the year down here? I don't know. It's going to be a matter of how quickly we can recover. And I'm going to start positioning myself on the short side. The bullish momentum is gone. So let's take a look at what we've got setting up. And I'd already mentioned to you that we're going to see more selling today. We may see a little bounce in here, here and there, like right here. But eventually, if we get any kind of decent little rally that starts to spark hope that we start to come in and challenge the high of the day, it's going to fail much before that, probably around the 275 level. If we get back there, I'd be surprised because the selling pressure has been so persistent and so heavy. But if we do, then we'll see a round of late day selling into the close. How do we trade tomorrow? My suspicion is that this news that's out there right now is really going to weigh on the market, and we're going to see a couple of red bars in here. So I would encourage you to be short. I think KO is a really nice play. Let's see what else we can find. Take a look at a couple of searches that I've got, see if anything pops up that I like. Just scanning very quickly to go through. I'm going to look into heavy selling pressure today. Shop has been just a monster. Look at that run. You know, when the market was selling off, it was down at $350. We sold the $175 puts on this stock. And I think we got somewhere around $3.50 for them. Look at that stock was up to $660. Talk about a good put sale. That was incredible. Option implied volatilities were so high. Roku struggling on these major moving averages in here. This could be a nice short, especially if it closes below that 100-day moving average. So I like that. Netflix reports earnings after the close today. I wouldn't touch it. I don't trade pre-earnings. Alibaba starting to come down through that 100-day moving average after a nice run higher. I think you start to see some real weakness in that stock. Here, I've already shown you three other stocks that I like on a swing basis that I think will work well overnight. Abbott, I love it. It's run a little bit too high. Should find support back here at the horizontal level. I'd probably be a bullish put spread seller anywhere around this $90 level or so. I'm going to let the stock come in. We'll see what happens after that. Too choppy, no interest there. GILD sold a great bullish put spread about a week and a half ago in my daily videos down here on that 100-day moving average. That was a sweet one. LVS, I think, works on the short side. You can see downward sloping trend line right in here. Never could get going with the market. Put the SPY overlay up. You can see market rally, rally, rally. Look at this last part of the rally. Stock down, down, down. That's what we want to see. So Vegas is probably going to be pretty slow to reopen. And I don't know that people are going to be real anxious to go in and play the gaming tables with the coronavirus still out there. So that was a very easy search. Heavy selling was the search I used there. Relative strength 30. This is what we use to find intraday weakness. FTNT was one I looked at earlier today. That is a huge drop below that 100-day moving average. As soon as it eclipsed that 100-day moving average, I knew it was gone. I can't short anything like this on a move like that. I need at least a bounce, and then I need to start seeing some relative weakness. So this one's too far out of the gate. Let's do something very quickly. We're going to go into custom search. We're going to put that up. We're going to look for some liquid options. We're going to put in a rating of 3 or higher. Then we're going to go in. We're going to click bearish trade signal on a 4-hour and a daily basis. And then we're going to go in and look for relative weakness. So we've got sell signal on 2 time frames and relative weakness. Let's see what we find. Those would be your candidates. Those would all probably be excellent shorting candidates. Let me click on a couple. Took it off screen so that you can see what's going on with those picks. And we'll look at that. Micron backing off pretty readily from that resistance level right in there. And that's after earnings recently. So a lot of weakness in that stock. It's another nice short. Do another one. LYV. Never got off the deck. One little bounce, lower high. You can see, never rallied with the market. Put up that SPY. See, rally, rally, rally. SPY is the gray line. Stock can't even move higher. So it's likely, got a nice wedge formation right here. You can see it there and there. Likely to break that wedge on the downside. I think LYV is a good short. Super easy search. Not a lot of candidates. Click, click, click. Then you know where to look for your shorting opportunity. So that wraps up today's video. Look for more selling today. I think this is going to be a really nice, strong, bearish trend day. At best, we see a little bit of a rally in the last 30 minutes of trading. Any bounce between now and then will eventually set up a good shorting opportunity. If we close on the low of the day, I think we're going to see follow through selling tomorrow. It may come in the form of a small, tiny little bounce on the open tomorrow, and then you'll see additional selling pressure. This has been very, very heavy selling today, and I think we're going to see follow through tomorrow. Again, please subscribe to the YouTube channel and turn on your notifications so that you don't miss any of these videos, and give it a thumbs up if you like the content. Thank you. We'll see you tomorrow.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.